I want to recap a few different trades that I took and some trades that we took in my Discord community with explaining the significance of having a plan, trusting that plan, and then executing the trade flawlessly, emotionless, to make stress-free profits. And if we follow this process consistently, we're going to make a lot of profits in the long run as the result. So I'm going to break down the charts of each setup, why I took the trade, why I entered, why I exited, and then I'm going to relate each setup to important psychology tips, which are basically going to help us improve for future trades. Now, it's very important before you enter any trade. I don't care how you trade, what market, options, futures, stocks. Before you physically click the buy or sell button, you must have a predetermined plan and you must have a solid trade thesis. When this occurs, we have to do everything to follow this plan, trust the process, and we cannot let our emotions do the trading. We have to let the chart do it and follow what the market and the chart is telling us. Now, a little while back on my Instagram at Investotrade, I'm going to post a link for you all to follow this in the description below. I definitely recommend following me on here. But a few weeks ago, I posted a picture about a trading plan. And basically, these are the things that you need to look for before you enter a trade. It has to do with your entry, your stop loss, where you're going to exit, market context, along with trading with no emotions prior to entering and then during the trade. We must follow this process and detach ourselves from the money. So how we relate this to the chart is I'm going to pull up the pre-market plan in my Discord. I post these every single day. Setups I'm watching, levels I'm looking out for. This was on the S&P 500 today. This was Thursday, May 26th. And basically, let me make this bigger so we can see it a little bit better. And let me zoom out a little bit. So basically what we had was the day prior, we bounced off of a 3917 demand zone. We could see it down here. And then we created demand on the way up at 3962, along with overnight hitting a 4007 supply zone. And we were having a hard time getting above. So this is kind of context minus a few other missing pieces. And there's a few scenarios that I said I'm watching. Number one was if we could successfully break above 4015, which is this yellow line over here, in the first hour with strong buying volume and strong market leading equities, I'm expecting a continuation rally and I'm going to target the 4052 supply zone for longs. Now, this is essentially my trading plan. I could only post on, how I trade, what I look for, and I explain my thought process and my reasoning for this trade. Now, why this was important was recently we just broke out of a decent trading range where ever since last Thursday on the S&P 500, we moved in a very tight consolidation range. And in this area over here, we had tough supply that every time we hit it, we sold off. Later in this video, I'm actually going to show you an example of us selling off from this supply zone. But today on Thursday, we consolidated inside of that upper balance range / supply overnight, and we were opening pretty higher. Not only this, but we also had a supply zone from the previous drop last Wednesday at 4007 that if we could get above this zone, we did not have any resistance until 4038 and 4052, which is why in the plan that I said if in the first hour we can break above 4015 with strong buying volume and strong market leading equities, I'm expecting a continuation rally and I will target 4052 supply zone for longs. Very simple plan, no reason to overcomplicate it, and that was my exact thought process before the market even opened. I sent this plan out. These are just my levels of interest and we gauge how and what price does at these levels of interest. So essentially the market opened up. We had very strong buying pressure leading into the supply zone, sliced through it. I want to note that in the past couple of days, you're even going to see it on a NASDAQ example over here. We had very tough supply that every time we tested it the past few days by this box right here, we failed at it 4 or 5 different occasions. So supply zones have been extremely reliable in this downtrend. However, yesterday and today, we started to see a different reaction. We haven't seen this type of buying at a supply zone. So my philosophy with the market is a different reaction is going to bring a different result. When you add on to the context that we bounced off of a demand zone overnight, sliced through supply, and have strong buying pressure as the market opens up above our 40-15 level, this is valid confirmation for me to get long. And if you are watching the tape at the break of 40-15, very strong buying pressure. And at this point, when you decide to enter, you must have a plan before you enter that trade. Going back to this Google Doc over here, pull this up here. Before you enter any single trade, you must have a solid thesis and a predetermined plan. You must follow that plan, trust your process, and do not let your emotions do the trading. Let the chart do it. So as we broke out of this, a valid stop loss for me was about 40.10. And like I said earlier, we didn't have any resistance until 40.38 and 40.52. In fact, in the intraday commentary tab, this is basically where I update my thought process throughout the day. At 9:57, I said the 4052 level is close, but it's a little too far away. I'd expect some resistance at 40.38 first, and then we could target 40.52. So as the market opens up, 4038 was the target. Stop loss was 4010, maybe 4007, depending on your risk tolerance. So we're really risking about 5 or 7 points to make a potential 23 points. Very, very good risk to reward. 5 to 1, 4.5 to 1. Extremely good risk to reward. I'm going to go to a 1-minute chart. And as soon as we broke above this level, consolidated right at 4015, continued to rally, hit 4038 perfectly, and began to stall out here, right? Now, at this point, I had a lot of members in the Discord messaging me saying, I'm getting a little nervous. You know, we hit target. Should I sell my remaining contracts to protect myself, or should I hold to the target? And honestly, how I respond to this is the people that ask me this, I basically responded to this to them. There's 2 ways that I sell a position. 1, if my target hits, or 2, if my stop loss triggers. Everything else in between is noise. The market isn't going to move straight up in our favor all of the time. Pullbacks, bounces, consolidations, they're completely normal. They should not freak you out. And if they do, and you're trading with your emotions, you're nervous, you're anxious, you're sweating, you're scared, that means you're focusing too much on the money and you're letting your emotions get involved. You can make money in the short term, but you're not going to have sustainability, and it's going to be very hard to bring longevity in your trading if you are focusing on your emotions and you're letting them do the trading. So as the market was coming up and people see this pull back down, I ask, do you have a predetermined stop in play? And if you see the market just coming down like this, there's no reason to sell, right? We're still in an uptrend. We're making higher highs. We're making higher lows. The market's consolidating just like we did earlier. We're seeing strong buying on the tape. We have very strong market leading equities. We're breaking above supply, right? Everything that I'm naming here is very much leaning towards the bull side. We have no reason to freak out. We must follow our plan, and we hit 4052 to the exact tick at 1121, and this is a good area to sell your full profit according to your plan, according to my plan, whatever it may be. I don't care if you follow my levels exactly, but I want everybody to get self-sufficiency with these levels, understand why I came up with them, and understand the process leading up to them as well. And I'm not here to say, and brag about how accurate the plan is, because they're not this clean every single day. However, the point I'm trying to make is if you follow the process, play levels instead of your bias, you can make a lot of money if you consistently follow that process and you have an edge that works out for you 6 out of 10, 7 out of 10 times. These SPY calls, as the S&P was breaking out, went from a low of $1.30, and from the high at that day, they went to a high of $3. That's over 126% return in a matter of a few hours. Very fast. And if you do this consistently, your small account, your large account can grow by following the same process day after day. And for those that have been following me for a while, you all know I like to say the more pieces of information that we have, the more pieces to the puzzle that we could put together, the clearer the picture and the cleaner and higher quality of our setups could be. That same supply I was explaining earlier with NASDAQ that tested multiple times, in the pre-market plan today, I said that these supply zones are going to be a burden for higher prices unless we get above. I want the market to clean this chart up. I do think if we could successfully break above 12075 with strong volume and market leading equities, it's going to lead a bigger rally into 1220 and then 12234 supply. So not only for the S&P 500 broke out above that major level, we also had NASDAQ to support this thesis, going to a smaller time frame, strong buying pressure, slice through that supply zone like it was not even there. So at this point, I'm just going to remove that zone, right? I'll put it back on just for demonstration purposes. Broke above our level, strong buying volume, hit the supply above, and continue to move higher with very, very strong buying pressure. We also had Tesla. Again, putting all of the pieces together. When everything comes together at the same time, a few minutes before, a few minutes after, that's when not only we're going to get continuation, but we're also going to get high quality setups because all of the stars align, the pieces to the puzzle come together, and the more pieces we have, the easier it is to read the picture. The plan on Tesla today was we've been bouncing out of this 630 demand zone. We did it yesterday perfectly. Bounced out of that 630 demand zone. And for today, we are watching for it to break above 679 with some very strong interest. And I'm going to be open to playing longs for continuation, targeting 700 and then the 708 supply zone. This will help with overall ES and NQ strength. Very, very important right there. We want to see strong market leading equities to support our thesis. We had all three names break out today, helped each name above our key levels for solid continuation and a solid Thursday to get started for a long holiday weekend. And on Wednesday, May 25th, the day prior to this video being released, I took a setup on ES or SPY again, and I want to go over this commentary and why I took this trade because this is going to relate to the points that I said earlier. So keep in mind, there are only two ways that I sell a position. Number one is if my target hits. That target is predetermined before I enter the trade. Or number two, if my stop loss triggers. That is also predetermined before I enter the trade. And my stop loss is always based on where my analysis is going to be wrong. Everything else in between is noise. Everything else is just going to be our mind and our thoughts trying to play tricks on us. Believe me, I see it with new traders. It happened to me when I first started trading, but our emotions try to trick us at all costs. The market is not going to keep moving in our favor all the time. There's going to be pullbacks, there's going to be bounces, there's going to be consolidations, but as long as your target doesn't hit or your stop loss doesn't trigger, that means you have no reason to get out of your position. And if you do, prior to these 2 points triggering, that means your emotions are doing the trading and you're focusing too much on the money. You may be over leveraged in your position or you just may be too attached to the money. So the setup on this yesterday, May 25th, in the intraday commentary tab at 9:45, when the market looked like this, about to break out, I said, as long as the S&P 500 could hold above 3936 in the next few minutes, I'm going to be playing longs targeting 3959 supply. We had equities showing extreme strength. We had strong buying volume at the open on the S&P 500, and we had NASDAQ testing supply above. So as the market opened up, there was some strong buying pressure on the time and sales around 3940, 3936, which is where I came up with my 3936 area, and I wanted this to hold. So I'm going to actually fast forward this. I'm going to extend this, act like this is a green box. Then the market pulls back. Look where we pull back into, right into 3936. I mean, I don't understand how much clearer I could get than this, but I said as long as we could hold above 3936 in the next few minutes, I'm going to be playing longs, targeting, this is supposed to say 3959 supply, which is this zone up here. Also, from the pre-market plan, the level was posted in there. And I said, as long as we could hold above demand, I'm going to be focusing on longs, targeting 3959 and 3973 supply. So what happens? The market pulls back into this level. I do not get long right away. My fills are somewhere in the Discord. I could go back and pull them up. I did not get long at this level right away. Instead, I wanted the tape to tell me when, with the context that we bounced off of this demand. Two ways you could play it. You could get long right at it, but it's a lower quality one if buyers don't show up right away. Or number two, use it as context and get long somewhere along the way. I got long at 10:04, right? So my analysis for this trade was I'm long at 10:04. When the market looked like this, my stop loss for this trade had to be 3935, below 3935. So I'm risking about 15 points, and my reward was about 23 points at that 3973 supply zone, maybe even 9 points because this was my first scale. So honestly, not a very good risk to reward at all. And looking back on this trade, I should not have taken it. However, I viewed it as a high quality setup. I should have got a better entry closer to my risk, and I felt like my risk was a little too high at this point, but I did enter, and this trade did work out. However, we started pulling back, and right away, I'm in long up here, right? 3 minutes after the market starts pulling back. I know some members were in this trade with me. They followed me perfectly, right? Everything was lining up to the bull side, but as I'm in this trade, I had tons of members messaging me saying, I'm getting a little nervous. Should I sell here? Should I keep holding? And I always say this, and I want you all to keep this in your head, write this down, whatever. There are two ways I sell the position: if my target hits or if my stop loss triggers. Everything else in between is noise. Yes, the market pulled back, but did my stop loss trigger? No. So I had no reason to panic, no reason to sell. The market bounces off of 3936 again, right here when we pulled back into it, and rallied right into 3959 supply. I got out 95% of my position, or 90% of my position, and then I held the rest to 3973 supply. And another error on my end was I should have got full out of this position at 3973. However, I really wanted the strength to continue and target 4,000. I got very greedy with this position, and as it started pulling down, I got out the remaining of my contracts. I missed out on about $1.20 per contract, but I'm not going to complain about it. This really was not a good trade setup at all. But the lesson I want to leave you guys with this here is follow your plan. Do not let your emotions take over. And if the risk to reward, like in this example, is not very favorable, either trade smaller size or don't take the setup at all. This could have very well broke below my stop, and my risk would have been way too high for my reward. And I'm not going to have any profitability in the long run trading with this type of risk to reward ratio. That means I got to be right way more of the times than I'm wrong. And in trading, it should be the opposite way. So really not a good setup. It worked out perfectly, and it was very, very clean setup, very simple analysis, spotting a buyer on the tape, wanting him to defend that position, getting long, and hitting my hitting my target, and getting out of the position very stress-free. Pulled back into that 3936 area, and this rally from earlier, this move up right here, actually formed a demand zone in this area right here. I want you to act like this is a green box. And we had FOMC yesterday on Wednesday. The market pulled back into that demand that got formed earlier. High volume, price precedes news. The market pulls back into this demand zone and rallies. I wish I took this setup, but I'm honest, I did not. In hindsight, it looked much better than it did in real time, and I honestly didn't see it form in real time, but clean bounce off of that demand. Keep in mind, zones form dynamically throughout the day. Always draw new zones as they form, because this is a perfect example of a pullback into it and a clean rally out of that. So I'm going to end the video on that note. I hope this educated you with following your plan, stop loss, risk to reward, and just clean auction process and market context with how I trade. If it did, drop a like, comment if you have any questions, and definitely check out the links in the description below. I offer a very in-depth and educational course. It comes with access to the Discord at no extra charge.